at Chaikin Analytics, and I'd like to welcome you to our presentation of the key to trading profits, the ideal setup, and know when to pull the trigger. Presenting today is Marc Chaikin, founder and CEO of Chaikin Analytics. As a reminder, this webinar is being recorded, and a copy of which will be sent to all registrants. Also, please submit your questions via the GoToWebinar chat window throughout the presentation. Now, to get us started fresh off of today's Chaikin Analytics Options Academy course hosted today, here's Marc Chaikin.
Thank you, Joe, and welcome everybody. We've had a pretty busy day at Chaikin with this new Options Academy that Joe Bicella has created, and I was on there for a few minutes. But today we're going to be talking about the key to trading profits, which is identifying the ideal setup and knowing when to pull the trigger. Let me start out by introducing myself to those of you who aren't familiar with my background. 50 years on Wall Street, survived 10 bear markets, and have been using technical analysis for the last 45 years in combination with fundamental analysis. And the setup is a combination of technical and fundamental analysis combined with good entry points. Along the way, I've been mentored by some of the smartest and most successful institutional investors. The reason that's important is that the Chaikin Power Gauge rating, which is our 20-factor fundamental model, reflects what I've learned from both my clients and colleagues in 50 years on Wall Street. It's the culmination of my life's work, and it's the centerpiece of the ideal setup. Since we started Chaikin Analytics in 2009, we've been fortunate enough to be quoted in Barron's and CNBC, MarketWatch, Forbes, and most recently Barron's, in their electronic investor column, referred to Chaikin Analytics as one of the top 2 quantitative sites on Wall Street because the perfect setup centers around our quantitative model. So this is really important. Now, we've been in a volatile market. Today was a good. We opened up more than 1% higher in the S&P, even more so in the NASDAQ. But we sold off near the close, still finished up on the day, but near the lows of the day. So let me ask you this question. Does the Fed, Great Britain potentially leaving the European Union, and the volatility surrounding all this have you spooked? If it does, then today's webinar is really going to be important because it's going to help you zero in on a methodology that helps you overcome the emotional factor in the stock market. Now, how many of you are concerned about the state of the market here? All these people on CNBC talking about a bear market, worldwide recession, and negative interest rates being something that's really, really troublesome. If you've spooked by the market, type a big S into the question box. And I see that, as on most of our recent webinars, people are nervous. Volatility has everybody concerned, and all these uncertainties around the Fed raising interest rates and what's known as Brexit, or Great Britain exiting the common market. So I thought I'd start the webinar by focusing on the market and the unique tools that Chaikin Analytics gives you to know where the market's headed. 3 very powerful proprietary tools in Chaikin Analytics. Chaikin Money Flow, which has been around for over 35 years, available on all of your online brokerage platforms. Also available on stockcharts.com. How many of you have used Chaikin Money Flow in your trading? If you have, type a CMF into the question box. Well, if you know me for Chaikin Money Flow and the technical indicators that I've created, that we've taken it to another level with Chaikin Power Gauge rating. In the Chaikin Power Gauge rating, is reflected in something we call the power bar. For every list, index, industry group, ETF in the system, whether you create it or we create it, we have something known as the power bar. It's an extremely important indicator which measures the number of stocks with bullish, neutral, and bearish power gauge ratings. So one of the proprietary indicators we're going to look at in a minute to know the likely direction of the market is the power bar for the SPY or the S&P 500 ETF. And then the third proprietary indicator that we're going to look at is something we call the relative strength, the RSP. The RSP is the symbol for the Guggenheim Equal Weighted S&P Index. As most of you know, the S&P 500 is a cap-weighted index. That means that the FANG stocks, Facebook, Amazon, Netflix, Google, Apple, the big cap stocks, the more volatile stocks, have an outsized influence in the price movement of the S&P 500. The equal weighted S&P doesn't care how big you are, it just cares up or down and what percent. So let's look at a one-year chart of the S&P 500 Spider ETF and try and make some sense out of where the market is right now and also look back at where it's been. So to see where the market is right now, we're going to look at the right side of the chart. And those of you who've been following our market insights or have been on other webinars know that we've been generally positive on the market and its ability to break through the 2100, 2135 resistance area, which has been in place since April of 2015, over a year ago. Why are we positive? And why in this week's market letter did we say, don't get too worked up about Brexit, view this as a buying opportunity? So first we'll look at the top of the chart, the power bar for the S&P 500. After 2 weeks of a decline, 5 straight days last week down, still shows 110 stocks with a bullish power gauge rating and only 75 with a bearish rating. That's telling us that the majority of stocks in the S&P have positive potential based on our fundamental model. Now let's look down at the Chaikin Money Flow. Notice how this indicator, which normally fluctuates from red to green, and since so many of you know the Chaikin oscillator, I won't go through it in depth, looks back over 21 days, measures institutional buying and selling. Now it's been green or positive all the way back to mid-January, 5 months. Positive readings, even when the market sold off as it did over the last 2 weeks and back here in May. That's a very strong indication that institutions are buying the dips. And then finally, the relative strength of the RSP, the Guggenheim Equal Weighted, the S&P 500 or Spider ETF. Since late February, the average stock in the S&P has been outperforming the big cap stocks. This is what's known as a breadth indicator. It's a measure of participation in the market, and it's telling you that more and more stocks are participating on the upside, which is healthy because in 2015, part of the reason the market couldn't break through 2100, 2135 on the S&P is because only a handful of stocks were leading the market higher. The rest of the S&P was in its sort of own funk or bear market. Now let's just look at the two bottoms that preceded the current rally, which began on February 11th. We call these W bottoms because they look like the lower W. A big waterfall decline, we had one on August 24th, a rally up, and then you test the lows, and if the market successfully holds those lows and then starts to rally, you have a W bottom. Big difference between these two, and by the way, W bottoms don't normally come this close together. The one we had in August, October, when the market rallied up from 1870 on the S&P 500 to above 2000, over 140-point rally, almost 7.5%, 8%, Chaikin Money Flow stayed negative. So it didn't give us a clue as to whether or not we were going to hold those lows. But when we came back down and made the low, money flow was positive. Contrast that to what happened in January and February. We had that waterfall decline again. I'm sure most of you know it began the day that the Fed raised interest rates, December 15th. The Fed has been driving this market since the bottom in 2009. We came down and we made a low. Money flow was actually positive. Very bullish sign. We rallied up, money flow got even stronger, came back down, equaled the low at 1809, and Chaikin Money Flow, not only was it green or positive, big mountain of green, sort of like Quasimodo with a green cape. And it stayed positive ever since. And every time we've come down and gotten oversold on a short-term basis, we've been telling people buy the oversold because money flow is strong and the power bar is strong. If you're making a market bet with an index ETF, you typically have three choices: the spiders, the triple Qs, and the IWM small cap. Let's take a look at the triple Qs to see if they're giving us the same strong picture as the spiders. So if we look at the triple Qs, we see two very important indicators. One is that since late January, the triple Qs have been underperforming the spiders. How do we know that? Because our relative strength indicator is red and not. So what does that tell us? Well, in with the fact that the triple Qs didn't even get close to their previous peak in November, it's telling us that if we want to make a market bet, if we want to buy the market instead of individual stocks or groups, that spider is where we should look. But in general, the takeaway I'd like you to have here is we've got some proprietary indicators in Chaikin that can help you gauge where the market is headed. And be as smart as these talking heads on CNBC who'll drive you crazy because they're only on there to make an outrageous statement typically, although there are reasonable and smart people on there. So we're going into the balance of this webinar thinking that the market is a buy on dips. And we'll show you the perfect setup for both bulls and bears, but keep in your mind that on pullbacks like we just saw last week, you want to be looking for that perfect bullish setup. Now, we're going to go through 5 keys to identifying the ideal setup. They revolve around the Chaikin Power Gauge Rating, Chaikin Relative Strength Indicator, Chaikin Money Flow, Buy or Sell Signals Analytics, and you can find them using our stock screener, which puts you in control so that you find lists of stocks, very tight lists of stocks that meet your criteria. And as a bonus, we're going to show you how you can turbocharge the profits that the ideal setup points you to during earnings season. Now, this whole webinar was inspired by a comment that Warren Buffett made, and has made many times. Warren Buffett has famously said, they don't call balls and strikes on Wall Street, so you don't have to swing at every pitch. You can wait for your pitch, what I like to call the fat pitch. You want to swing at fat pitches, the ones you can hit, the ones you can drive out of the park. So with all thanks to Warren Buffett, let's look at how Chaikin can help you find that fat pitch. Now, our most precious commodity today is time. And because of that, the biggest problem that we face as investors and even in our personal lives is information overload. Because information overload robs us of time and energy. So the key to making money in the era of information overload, what this slide calls the age of distraction, is focus. Now, we just focused in on the stock market, with a very methodical approach. We're not going to be right 100% of the time, but it's served us very well all through this bull market, and particularly since the bottom in February. And our solution is Chaikin Analytics for both iPad and desktop, with all the tools that we're going to show you in the next 45 minutes and all the added features that go along with it, including our integration of an idea-generating module from a company called Options Play. Now, Joe and Tony Zhang, one of the founders of Options Play, did an educational webinar today, 4.5 hours on options. So we're just going to do a couple of slides to show you Options Play in action. But if you want to learn more about Options Play, sign up for one of Joe's orientation sessions or for one of our paid Option Academy teaching sessions. Now, Chaikin Analytics points you in the direction of larger profits by giving you a directional edge. Whether you're an options trader, a swing trader, investing for your 401k plan, doing buy and write strategies to generate income, a directional edge is what you need to be profitable. I ran an options department for 5 years for a regional brokerage firm with about 300 brokers. I saw thousands of accounts trading options. I've traded myself in both the options, futures, and the stock market. I can tell you that without a directional edge, without a strong belief about where a stock is headed, you're not going to make consistent profits. What does lead to consistent profits is a directional edge, but it cannot be just technical, because the big institutional investors make their decisions based on fundamentals. So if time is our most precious commodity, how are you going to monitor the fundamentals of enough stocks to have a stable of candidates for both the long and the short side, for puts and calls, for swing trades? Well, we call that answer the Chaikin Power Gauge rating, which combines fundamentals, technicals into a quantitative model, and then we enhance that with Chaikin buy and sell signals, which use the power gauge rating or relative strength to filter the sell signals and the buy signals to put the odds on your side. That's the whole point. You want to give yourself an edge based on probabilities. Now, this pyramid holds the key to the ideal setup. At the top of the pyramid is the Chaikin Power Gauge rating, our fundamental 20-factor model that has, over the last 5.5 years, had a phenomenal track record of pinpointing the stocks that were likely to go up and those that were likely to go down. At the bottom of the pyramid, 2 technical indicators. The ideal setup just looks at 2 technical indicators in conjunction with the power gauge rating. And then right in the middle, that sweet spot, are 6 pairs of buy and sell signals. And when those buy and sell signals trigger, you've got your fat pitch if the ideal setup is in place. So let's take a look at the Chaikin Power Gauge rating. We distill it down to a graphic that goes from very bearish to very bullish. So the visual is simple, but please don't confuse simple with simplistic, because the Chaikin Power Gauge is very powerful, has predictive value. I like to say that it's like a Chevrolet with a Ferrari engine under the hood. And the reason I can say that with confidence is that over the 5.5 years that it's been commercially available, it's had a stellar track record of pinpointing stocks that are likely to outperform or underperform the market. It's 85% fundamental. It reflects what I learned with institutional investors for over 30 years, learning what they looked at to make their investment decisions. So we distilled 200 factors down to 20. group them into 4 components so they would make some sense to you. And these 4 components reflect what institutional investors look at every day. They don't all look at each of these factors, but value investors look at the financial metrics. So Warren Buffett and any good value investor, the Royce Value Fund, looks at free cash flow, debt to equity ratio, doesn't want to pay too much for $1 of earnings. So price to sales ratio is very important. Someone like Jim Cramer or aggressive hedge funds look at earnings growth. They key in on earnings surprises when companies give quarterly reports that are better or worse than expected, which leads to earnings estimate revisions, which are the single biggest short-term driver of stock price movements. And they do look at the technicals. So 15% of the model is technical, in addition to the factors on the chart that we're going to look at. This is an eclectic model. It finds a lot of different ways to like or dislike a stock. It can like an aggressive stock, like Amazon, Apple in its heyday, bearish on Apple now. And it can like conservative stocks, dividend stocks like Johnson & Johnson and AbbVie. It can like a Comcast or a Berkshire Hathaway. Eclectic model means you're flexible. You're not putting your feet in cement and saying there's only one strategy for me and that's value or growth. Let's look at the performance of the power gauge rating. Combining the testing and the real-time data, because the results are pretty much the same, in the Russell 3000 from 1999 through the present, so 17 years, the average very bullish stock, 428 of them at any point in time, up almost 20% a year. The average very bearish stock, down 1%, and that's after a 7-year bull market. Now, in 2015, the numbers really got dramatic and ugly if you were in the energy stocks or small cap stocks, because they were down, if they had a very bearish power gauge rating, 17% in 2015. The very bullish stocks were down only 1%. It's that ability to differentiate between stocks that can blow up and destroy your trading profits or your 401k plan and stocks that are likely to go up and help you build your retirement nest egg. 2 other proof points before we get on to the examples. Chaiken has partnered with NASDAQ. We've created 3 co-branded NASDAQ Chaikin indexes. They've been in the marketplace for over 2 years. They get rebalanced once a year, so they're like buy and hold portfolios. We've always said that the Chaikin Power Gauge rating has maximum value 3 months out, also works 1 month out for short-term swing trading and options trading. But the NASDAQ indexes have proven that the power gauge rating has lasting value 12 months out and beyond, because all 3 NASDAQ Chaikin indexes are outperforming their underlying benchmarks, the small cap and the dividend, by a wide, wide margin. And the final proof point is a partnership we have with First Trust Portfolios, who on December 7th launched the first of 3 unit investment trusts using the Chaikin Power Rating in a disciplined methodology to create the Chaikin Low Beta Growth Portfolio Unit Investment Trust. There have been 3 series. All 3 of these are outperforming their benchmark, which is the S&P 500. And they can only buy stocks in the S&P 500 that are low volatility. Whole point of this is to give you some confidence that what we're going to show you now is something you should seriously consider as a methodology. Now we'll start with a pattern we call classic Chaikin bulls, and this is the core of the ideal setup or fat pitch. A Chaikin bull is a stock with a bullish Chaikin power gauge rating that's outperforming the market with positive or green Chaikin Money Flow, telling you that the institutions are buying the stock. Now here's an example of a classic Chaikin bull, United Health Group. 1 year chart, and this happens to be one of the 20 stocks in each of the 3 Chaikin low beta growth unit investment trusts. So real money is going into this based on a computer model that we created to help First Trust Portfolio populate these equal weighted portfolios. Now the reason it's a classic Chaikin bull is that at the bottom, the power gauge ribbon for the last year since mid-February has been green or bullish. Think of that dial we looked at a few minutes ago. On top of that is the Chaikin Relative Strength Indicator, which looks back over 6 months, compares a stock to the S&P 500. And in this case, it's green and has been since mid-January, so the market is agreeing with the model. That is critical to the ideal setup. And then finally, Chaikin Money Flow has been consistently green since mid-January, indicating that the institutions have been accumulating United Health Group. Now we've added an earnings module to Chaikin Analytics, and you can ask for earnings reports, and the abbreviation EPS for earnings per share is colored green, meaning that United Health reported a positive earnings surprise in each of the last 4 quarters. That's very important. It's one of the 20 factors in the model. It leads analysts to raise their estimates and their opinions on a stock, and it contributes to upward price momentum. Now, on this chart, you see 2 examples of the fat pitch, because we've overlaid our oversold buy signal. Those 2 green triangles constitute the fat pitch. These are the pitches you want to swing on. These are the trades you pull the trigger on. These, for both short-term options trading, for swing trading, and investing, are your opportunities. Now, what is an oversold buy signal? We explain it on the website, but it's really simple. A stock with a bullish Chaikin power gauge rating makes a new 8-day low and gets oversold. It's as simple as that. Works 2 out of 3 times. I learned this particular technical technique from Larry Williams, so we'll give him full credit for this. New 8-day low in a stock that you like is a buying opportunity. That's your fat pitch. Now, if you're a trader and it goes up to that upper volatility band, consider taking at least half your profits, take some money off the table, because that usually pushes back price. So particularly if you're an options trader where time is such a critical element and it's your friend, you want to use that upper volatility band as a reference point to take some profits. Now here's an example of a classic Chaikin bear, because you can get a fat pitch on the downside. Bearish power gauge rating, underperforming the market. Chaikin red, not green, and our poster child is Kinder Morgan. Fracking stock, everybody's favorite 20% yielder back in April of 15, turned out to be a trap. Power gauge rating's been bearish in 2015. Bearish power gauge for almost a year, underperforming the market. Look at that negative money flow. There's your ideal setup, and these sell signals are the fat pitch. These are overbought sell signals. A new 8-day high with a bearish rating. Great opportunity to buy puts, to get out of a stale stock position. And even now, with Warren Buffett buying the stock, it's still having a very difficult time getting above 19. Power gauge has turned neutral. It's now outperforming the market, but it takes time and analysts changing their views, and along the way there have been a number of fat pitches. If you were trading this stock based on the ideal setup and the fat pitch concept, you'd be batting about 700. And in the options market, that is profit. Now, how do you find these stocks? Well, in Chaikin, you can find them in our hot lists. We have power gauge hot lists, featured bulls and bears. You can find the bullish stocks, check the money flow and the relative, or you can use our screener. And we're going to get into an in-depth screen right toward the end of the webinar, so stay with us even if you've heard some of these concepts before. The screener puts you in control and enables you to find the stocks that meet your criteria, your ideal setup, your fat pitch. Now, we've given a name to two concepts that are part of this whole concept of the ideal setup. One we call the dynamic duo. That's the combination of the Chaikin power gauge rating and Chaikin relative strength. The dynamic duo finds big winners, particularly when it's by Chaikin Money Flow. And relative strength is really important because you want the market to value your fundamental opinion, whether it's a fundamental opinion derived from our quantitative model, from your own research, from Jim Cramer, from reading Barron's, whatever the source is. If the market is confirming your opinion, that's a good thing. If it's not, problems. But one other concept here, which is not the ideal setup, but something that many of you experience if you're a momentum trader, is that relative strength stands alone as a bullish or bearish indicator. Now, what do we mean by that? What we mean by that is if a stock is outperforming the market, particularly these concept stocks like cloud computing and internet, e-commerce, and the power gauge rating is neutral because they're overvalued, you can make money in that stock, but be mindful that you're on a high wire without a safety net. That's why we like the concept of the ideal setup and the fat pitch, because when everything is lined up, your probability of success is much higher, and if it doesn't work out, it's not the end of the world like it is if a relative strength stock without a bullish power gauge blows up. You've got serious. Now here's an example of the dynamic duo on the upside. Citrix makes the software we're using to give this webinar. Go to meeting, among other things. They're now spinning off these divisions and they'll be focused solely on enterprise. But when the power gauge rating is bullish and relative strength is bullish, you've got the market agreeing with the model, and that is the dynamic duo. And now you want to look for that signal, particularly if money flow is green, because now everything's lined up. That's your ideal setup. And in late April, an oversold buy signal, there's your fat pitch. How pretty would it have been on a call option on Citrix with the stock at 80 and watch it go to the upper band at about 87 in less than 4 weeks. Now, coming into today, because the market was down 5 days in a row, we had another oversold buy signal on Citrix. Look down at the bottom of the chart. Can you see the setup? If you can, type yes into the question box, please. Bullish power gauge, outperforming the market. Chaikin Money Flow is green as you make an oversold. You make a new 8-day low. There's your fat pitch. If you bought that coming in, obviously the market gapped up. If it was a normal, wonderful entry point. How many of you can see that? Can you feel it? If you look at these charts long enough, you can almost feel it. And here's a company that's had 4 straight quarters of positive earnings surprises. Typically spikes up afterward. back here in July. Big spike up, kept going and then pulled back. October, positive earnings surprise, big spike up, kept going, pulled back. In the middle of that January, February W bottom, spiked up, but then sold off, and then finally back here in April, huge spike from 80 to 90 on a very positive earnings surprise and a restructuring announcement. So these patterns repeat over and over and over again. Look for the fat pitch, particularly after an earnings report. They'll work 2 out of 3 times. Now here's an example of the dynamic duo on the downside. Twitter. Poor Twitter. We hear every day, is Twitter ever going to get their act together? Are they going to be bought out? Because LinkedIn was bought out, is someone going to buy Twitter? It's an absolutely ridiculous concept in my view, because Twitter and LinkedIn are totally different companies. But that's the way Wall Street works. If one social media stock like LinkedIn gets a bid from Microsoft, then there's speculation about Twitter. Don't buy into it. Check to see if there's an ideal setup. But if you do, you'll see that there's actually an ideal setup to the downside here. Power gauge is bearish. Twitter is underperforming the market. Chaikin Money Flow is red, not green. And look at all these fat pitches in the way. Sell, sell, sell. Almost every one of these worked. You'd be batting almost 900 if you took each of these trades. Money flow sell signals. Now we have another concept that we call personality changes, and they're just a rest stop along the highway to the ideal setup, but they're really important. A personality change is a stock that's been outperforming the market, so the relative strength is green, that starts underperforming the market. And we've smoothed this out so it doesn't whipsaw you. And conversely, a bearish personality change, which we just defined, is mirrored by a bullish personality change where a stock that's been underperforming the market starts outperforming the market. So here's an example. Crane and Company, it's a conglomerate. We featured it in Market Insights this week as one of the strong stocks in strong industry groups. The power gauge rating has been bullish since mid-October with a couple of periods of neutral, but the stock was underperforming the market until early February. So even with a bullish power gauge rating, it made new lows into that W bottom, but then it came out of it and started outperforming the market. We call that a bullish personality change. The market is now agreeing with the model. And Chaikin Money Flow is strong, so we've got our ideal setup, and then we look for the entry point, which is the fat pitch, and you got it here with a relative strength buy signal in late April. Stock is outperforming the market, comes down under the 21-day average and then moves back above it. That's a relative strength buy signal. That signal lasts for 4 to 8 weeks. So you've got the dynamic duo strong, and you've got 2 fat pitches here, 2 opportunities in this chart based on the relative strength buy signals to get in to a trade or a long-term position in Crane. Now, for the personality change on the downside, we're using SunEdison as an example. This chart anymore. Why? Because the company filed for bankruptcy. A very overhyped solar energy stock with Merrill Lynch recommending it back up here in the 28 area. The power gauge rating turned bearish. Chaikin Money Flow was already negative, indicating that the institutions knew something was amiss. 3 straight quarters of negative earnings surprises with a bearish personality change. This highlights the reason that the concept of a personality change is so important. If you were a Lynch customer and you were using Chaikin to validate Merrill Lynch's research, what do you think you would have been seeing? You would have seen the personality change. You might have called your broker and said, why are we in this stock? It's breaking down, changing character. Or you might have just taken matters into your own hands and said, get me out of this. Now, along the way, with money flow negative, you got these periodic rallies. Those are your fat pitch sell signals. This one came at $9. This one came at $5. Merrill Lynch put out a sell signal on this stock at $3. It's an absolute crime. And then they filed for bankruptcy. Now, at a conference we spoke at in California about a month ago, a broker from Merrill Lynch, ironically here in the Philadelphia area where our office is, said, oh my God, if I had only had Chaikin. I bought SunEdison at 15 on the way down from 30 because Merrill Lynch, my firm, this is a broker at Merrill Lynch, an advisor, was still recommending it. If I'd been using Chaikin, I would have saved a lot of pain and money for myself and my clients. Now, you still have the opportunity, if you're a Merrill Lynch customer, to save some money because Merrill Lynch still has a buy rating on Solar City, one of Elon Musk's promotions. Now, Solar City has had a bearish power gauge rating all through 2015 and 2016. Periodically, it spikes up for a whole series of reasons having very little to do with whether this company is ever going to earn any money. And just recently, they had a negative earnings surprise, and the stock dropped from 30 all the way down to 16. It's now rallied back up a bit, but if you're a Merrill Lynch customer and your broker has been telling you that they still have a buy rating on Solar City, run the other way. Why? Because not only don't you have anything that's bullish here, you've got the ideal setup on the downside. Now, one of the steps to making money from the ideal setup is to use sector and group rankings to supercharge the setup. So on the left of this chart, I have our industry group rankings where we take 65 industry groups, sort them by the ratio of bullish to bearish power gauge ratings. Right at the top, where they have been for the last month or 6 weeks, metal fabricating, steel, home furnishings. And that performance for the steel group is mirrored by our sector view, which is a new feature of Chaikin Analytics, that shows that the mining stocks are up 58% year to date. So how does that lead to a profitable idea and an ideal setup? Well, one of the stocks in the steel group that we featured is a bullish stock and a bullish industry group, doing this now for 2.5 months, is Steel Dynamics, STLD. You've got the ideal setup. Can you see it? If you can, type a big yes again into the question box. And I see that most of you are getting it. Not only does it work, but it's visual. It's not hard to figure this out. Bullish power gauge rating, outperforming the market. You had that bullish personality change in January that came at 18. Why is that so important? Because this stock had been bearish. You don't want to keep your feet in cement and say, I'm not going near Steel Dynamics. It's in a bad industry group. It's been going down. You want to be alert to these changes in mood swings. And then right after it turned bullish and started outperforming the market with positive Chaikin Money Flow, you got your fat pitch, a new 8-day low, oversold buy signal. The stock was trading at 1750, and it just went on a tear with positive earnings surprises. And then it gave you another fat pitch here in early May at 23.5 on the way to a new high at 2670. So 2 fat pitches supported by a strong industry group. putting the wind at your back. So the ideal setup is there. The signals are your fat pitch, but they can be enhanced by industry group or sector strength. In the case of the energies that were going down for the last year and a half, industry group or sector weakness. So that's why we say that industry groups supporting the ideal setup can turbocharge your profits. Now let's see some examples of the ideal setup in action. Here's a small cap stock called Central Garden, symbol CENTA. My wife Sandy, who has religiously adopted this methodology, has been in and out of Centa twice, perhaps a third time that I'm not aware of. Now Centa turned bullish in early March after having been bullish through most of 2015, but it was underperforming the market. But look at the money flow. Someone was buying this stock. Now, this isn't a big institutional name, so it's not the institutions in this case. Some very smart individual investors were buying the stock, and some small cap value funds actually. And here's your fat pitch. A money flow buy signal at 15.50 back in April. And the stock spiked up to 19. I know Sandy bought it there. She talked about it on our webinar. She bought it at about 16 and she sold it on that spike at 19. And then what did she do? She put it on her watch list and she bought it back at about 17. Why? Because it got oversold. There wasn't a signal there, but it was on her watch list and she saw it get oversold. Ideal setup, terrific money flow, pulled back to the 21-day average. She bought it, and then on Thursday last week, the stock spiked up to 21 and Sandy sold it. She had no idea why it went up. Nobody knew. It wasn't until after the close on Thursday that I found an article that said that SunTrust banks had raised their rating on Central Garden from hold to buy. Now this is a small cap stock, doesn't have a lot of analyst coverage. In fact, there's almost no earnings estimates on the stock. So a bank like SunTrust with a regional following that's pretty big can impact the stock. But she sold it at that upper band at around 21, and after 2 more days of upside market action, it's not much higher than where she sold it. So if you're taking advantage of the fat pitch, use that upper volatility band to take some profits. Here's another example of the ideal setup in action. F5 Networks. After underperforming the market from October through April, the power gauge went bullish at a price of about 105, and FFIV started outperforming the market. And look at the Chaikin Money Flow. Institutions were buying the stock. How do we know that? All green. Quasimodo with a big cape. And then after consolidating this upward move, you got your fat pitch. You got a money flow buy signal here in mid-May at a price of about 105. And then you got lucky. If you bought there, bought options, or went long the stock, you got the benefit of a takeover rumor where FFIV spiked up from 110 all the way to 124.50. And what a great opportunity to take a profit and wait for a pullback to get in to the stock again, which you got. It's pulled all the way back to 117.50 from 125. And today we got a nice little up move above 120 again. Thomas Jefferson once said, "The better prepared we are, the luckier we get." This is the whole point behind the ideal setup and waiting for the perfect pitch. Now let's look at a couple of examples of the ideal setup on the downside. Now Joe Bacella, on some of his training sessions has been focusing on a stock called Cavium. In the semiconductor storage industry, series of negative earnings surprises. Therefore, it should come as no surprise to you that the power gauge rating is bearish, because that's one of the 20 factors in the model. Underperforming the market, negative money flow. Joe identified this back in here in the April-May period as a bearish stock. And there's your fat pitch. This is your relative strength sell signal. Stock that's underperforming the market goes above the 21-day average and drops below it. The most recent fat pitch came in late May with the stock at about 49. It dropped to 45 on its own weight, and then they announced a $1.5 billion takeover bid for a company called QLogic. The market didn't like that. So Cavium dropped from about 47 all the way down to 38. If you had followed the relative strength sell signal at 49, you're a happy camper taking profits on your put positions. That's the fat pitch in action. Now, another example is Chipotle, a food service nightmare, losing the trust of their customers, people being hospitalized. The power gauge rating was bearish even before the E. coli problems surfaced, because Chipotle was losing market share to some of the other Mexican food chains. Stock started out underperforming the market. There's your bearish personality change. And then along the way, there were a whole series of sell signals. The last two, very timely. This one that I circled is your fat pitch. Why? Because money flow was negative, the stock was underperforming the market, and the power gauge was bearish. The stock dropped from above 450 to 380. And on a webinar that we did right as this sell signal was appearing in late April, we recommended, or featured, because we don't recommend things on these webinars, they're for educational purposes only, a vertical put spread on Chipotle that came from our options play ideas generating module. Back in April, actually early May, with the stock at 453, it suggested buying the 455, 420 vertical put spread. It thought that was the best probability, so it's circled in green. And that trade, which enabled you to control 100 shares of Chipotle stock on the downside for less than $1,300, had widened out to $3,400 as of last Thursday, when I pulled this chart for a webinar that Sandy did. So as soon as this stock dropped below 420, you had your maximum profit, which was almost a 200% return. Your maximum risk was $1,280. Those of you who are familiar with options know that one of the big benefits of options is you can control a lot of stock, an expensive stock like Chipotle, where shorting 100 shares of stock in a margin account would cost you $45,000 or $22,500 in margin, with unlimited risk. With the bearish put spread, you limit your risk to the cost of the spread, $1,280. In this case, because the fat pitch was there and the ideal setup, you made a triple. Now, our final piece of the webinar is the ideal setup during earnings season. There's an awful lot of volatility during earnings season, but to me, volatility equals opportunity. There's enormous speculation in the media around earnings reports, guessing whether a stock company will report better than expected or disappointing earnings. So how do you find winning stocks to trade during earnings season? Because most people are gun shy. Well, the power gauge rating is your GPS to find winning plays during earnings season, and if it's there with the ideal setup, then you can make an awful lot of money in these options trades. So to find examples of bullish setups during earnings season, I went back to 2014, because in 2014, the methodology we've been describing found the two biggest large cap winners, Skyworks and Southwest Air, and my wife Sandy is living proof that you can do it, because these were the two biggest positions in her portfolio in 2014. So Skyworks, which makes chips for the iPhone 6 back there in 2014, had a bullish power gauge rating, a series of positive earnings surprises, outperforming the market with very positive Chaikin money flow. So here are your fat pitches. Here are your ideal entry points. May with the stock at 42. June with the stock at 46. July, right before an earnings report that yet again was a positive earnings surprise, where the stock went from 47 to 4 in 3 days. Now let's look at Southwest Air. Same time period, 2014. Bullish power gauge rating, outperforming the market, positive money flow. That's the ideal setup. And here's your fat pitch, an oversold buy signal with the stock at around 22, and immediately rallies to 24, pulls back, another buy signal, spikes up after a positive earnings report to 26, and then another fat pitch here in July, where the stock goes from 28 all the way to 34 in a straight line. When the market agrees with the model, which means you've got your ideal setup along with the Chaikin money flow, and you get a buy signal, you tend to get price acceleration, particularly if the market is strong. And the market was strong in July and August of 2014. As energy prices were coming down, stocks like Southwest were benefiting. Now on the downside, we recently saw a negative earnings surprise in a company called Tableau Software, cloud computing, symbol DATA, D-A-T-A. Bearish power gauge rating, underperforming the market. Money flow was negative, should have been positive. Reversal sell signal ahead of earnings, and you get lucky because they disappointed and guided lower, and the stock dropped 50%. And a more recent example, Tiffany & Company, in the very, very weak retailing group, series of negative earnings surprises, bearish power gauge rating, underperforming the market, and right in here within that yellow box, there's your fat pitch, that second sell signal when money flow was red, not green. And then they had a bearish earnings report. The stock dropped from 72 all the way down to 60. So this is the value of this concept of the ideal setup. We got this testimonial recently, 400% return in 2 weeks after 2 weeks of using Chaikin Analytics. I have to say the trades I found with the system were really impressive. An AMD call with a 400% return, and a Google put spread with a 100% return. It is indeed the first tool I've used that delivers what is promised. That testimonial came in on June 6th. Now, how did Torsten find these trades? Well, he found it using our screener. I promised you in the beginning that I'd end the webinar showing you how you can use the screener to find a very, very small list of stocks to zero in on. So what did I do here? I started out with the Russell 3000, filtered out everything with a price less than 10, that did active trading volume. I'm down to 2,100 names. I require that the Chaikin power gauge be bullish because I'm looking for buy ideas. I'm now down to 556 names. Strong money flow and relative strength gets me down to 200 names, and I want them to be either mid or large cap stocks. I'm down to 110 names, some of the names we looked at on the webinar. Crane is in there, Citrix, a number of Steel Dynamics. They're on that list. And then I did one additional screen. I said, I want to see stocks that met all those criteria that had a buy in the last 2 days. That's down here. And I reduced 110 names down to 25, which is a very workable list. You can then monitor them. You can look to see if they're still buyable. And in that list was Citrix, which we saw had a nice update today, and a number of other stocks that meet these criteria. United Health Services, which is also in the First Trust low beta growth portfolio that we help create for them. So now that you know the 5 keys to identifying the ideal setup and when to enter the trade, you've got to think about Chaikin Analytics as your fast track to consistent profits. It includes the stock screener, options play, and earnings alerts. And back in November, even before we put earnings in, we got this testimonial. Thank you for making my life easier. I'm writing to tell you how absolutely incredible Chaikin Analytics has become. It started great, but with the options and screener additions, I feel it's absolutely the best product on the market, and I've recommended it to all my friends. Remember, we started out with the concept that time is our most precious commodity. So anything that makes your life easier by cutting down the time it takes to find the winning trades is going to help you A, trade better, and B, enjoy the profits by spending them on yourself and your family. So Chaikin Analytics is now at a list price of $3,300. As a webinar special, we're taking 50% off, reducing the price to only $1,650. You can take advantage of that webinar special by going to chaikinanalytics.com/setup. And this offer expires Thursday, June 23rd. I think. Now, you can also dial 877-697-6783 or email sales@chaikinanalytics.com. Now, with your subscription, you get my weekly Market Insights newsletter with our stock, the strong and weak industry groups, and market commentary similar to what we started the webinar with. You get my colleague John Schlitz's Morning Insights. Comes in your inbox before the market opens, so you don't have to stay glued to CNBC to find out what happened overseas or in the futures markets before the opening. And he also has a bullish or bearish stock of the day based on this Chaikin methodology and his own unique technical analysis techniques. You get small group tutorials to help you get set up and knowledgeable quickly so you can use all the features that we've been talking about in this webinar. And you get our new sector analytics in addition to the screener and the earnings alerts, all integrated into Chaikin Analytics. One final testimonial, 10x return in 5 days. In the 5 business days I've been using Chaikin Analytics, I've paid for the subscription over 10-fold. These initial results are nothing short of astounding. Please extend my thanks to the entire Chaikin team. And team is really the concept. From Joe Bacella and Michelle, who do the onboarding and the customer support, to our sales and marketing team, who really zero in on the benefits of Chaikin Analytics and help our subscribers at every turn. This is a team effort. I started this company in 2009 with my wife Sandy, and it's now grown to 27 people, all dedicated to your success. Now, as a special fast action bonus, if you subscribe by midnight tonight, you'll get a free one-on-one phone call with me. They typically last a half hour. This offer is good for the first 10 subscribers only. My time, as well as your time, is 10 subscribers, first 10 to subscribe by midnight tonight at that reduced price of $1,650. will get a free one-on-one phone call with me once you've had your onboarding, so that the session is as valuable as possible. In one session 2 weeks ago, a new subscriber talked about buying leaps, and I said I would incorporate a special strategy using leaps into today's options academy, and we did that. So these get very personal, and you can explore the problems you've been having in your trading with me, and we'll see if we can point you in the right direction and help you zero in on these ideal setups and how you can improve your trading with that. So with that, I'd like everybody for staying with us. Turn the webinar back to Joe Bicella and or Michelle, who are going to wrap up.
Great. Thank you very much, Mark. It's Michelle. Great job as always. In order to take advantage of your offer, Mark's offer, give us a call at 877-978-6257 or visit our website at www.chaikenanalytics.com/setup, or you can email us at sales@chaikenanalytics.com. As a reminder, this webinar has been recorded and a copy of which will be sent out tomorrow morning. On behalf of the entire Chaiken Analytics team, we would like to thank you for attending the webinar. Have a great evening, and we'll see you next time. 10.